Well, let me start by saying I agree with pretty much everything Travis just said in terms of his analysis of whether cryptocurrency is here to stay and what's happening in terms of members already using it, already moving into it. I would just add on maybe a strategic analysis that says something like, why do credit unions need to be formulating a strategy for this, or whatever your original question was there. Well, because we're being presented with ample data from the marketplace that says that other large financial institutions are, because we're being provided information now after 5 or 6 years of folks like Travis and you and me monitoring this in the industry. We're now seeing folks at CUNA writing articles about how credit union members are moving into this asset class at a disproportionate rate to the rest of consumers, your consumer base in the US. I think that's because of the obvious parallels between the technology model and the business model and mindset of credit unions, by the way. I think another reason credit unions need to be moving into this space is they've got to be informing themselves about the facts that in the 2017-2018 lows for these assets, there was roughly $25 billion in stablecoin money out there in the network. Now, in this latest collapse, there's about $175 billion in stablecoin money sitting on the sidelines that is ready to move into other crypto assets. So what this means is that dollar equivalents are leaving the traditional financial institutions, and they're not coming back. They're sitting on the sidelines in these new networks, waiting to move into other use cases for higher yields, higher dividends, better financing, better returns, less inflation. Right? Let's not forget the big word, inflation. So in my theory, credit union executives need to be looking at all of these strategic realities: hyperinflation, returns, dividends, yields, financing, portability, usability, cost of transactions. And in all of these categories, these new financial networks outpace the old electronic dollar network. Another thing to be aware of strategically is that we might be, i.e. we probably are, or certainly are, living through the era of decentralization. We've got all this data that says that over the last 10, 20 years, consumers have, consumer trust in centralized institutions has fallen off a cliff. And we're going to see other centralized institutions fail. Central banks, large crypto exchanges, et cetera. And in the wake of those failures, the communities and consumers will still want to use these new assets. This is the first new asset class in 30 years. Consumers aren't going to turn away on it, not going to turn their backs on it. Governments will regulate it. Large institutions will fail. Consumers will continue to lose trust in large institutions. And in that wake, there will be a great opportunity for local institutions to bring value to storing and using this wealth locally. That's my argument, one of my arguments for why we need to be paying attention to this as an industry.